Hi everyone, now I'm going to introduce to you our management committee. So I am the managing director of the company, Bermaz Auto Sinar Berhad. And then Azim is our CEO, and Dayang Afifah is our general manager of operation. And we have Mark Chai Pan Cheng there, our general manager of operation. And then last but not least is Mr. Syed Ramesh is our General Manager for Marketing. Today we're going to present to you about our business proposal. So our topic is Mazda 4S Center. So basically Mazda in Malaysia is run by Bermaz Auto Sinar Berhad. So Bermaz Auto Sinar Berhad was established in order to strengthen and expand Mazda's brand and business opportunity in Malaysia, and enable a company to respond quickly to the needs of the market. The new joint venture are to oversee local production and distribution of locally assembled model of Bermaz, the sole distributor of Mazda brand in Malaysia. So our headquarters is situated at Shah Alam, Selangor, Malaysia. So we are established from September 2000, and Bermaz Auto Sinar Berhad is actually acquired or owned by Mazda by 70% and Bermaz Auto by 30%. So our business is basically very simple. We assemble and sell Mazda cars in Malaysia. We import it from Japan and then sell to Malaysian market. So our company size is medium. We have about 3,000 employees around Malaysia. And we sell and assemble Mazda 2 model, Mazda 3, CX-3, CX-7 and CX-9. Now I'm going to explain to you our operational flow, the operational flow of Bermaz Auto Sinar Berhad. So we have three key activities: the inbound, the process and the outbound. For the inbound, we have the labor and then the warehouse where we import the car from Japan. So and then we process it. But our activity in the process is just assembly and then display in the showroom and then promote it. Okay, the last one is the outbound, is the logistic and then the finished good we deliver to the customer. So basically that's all. Thank you.
And now come to the second part of the presentation. This is about the master budget. Firstly, the master budget is a one-year planning document for our firm, and it also known as the aggregation of all the lower level budgets produced by the company's various functional areas, and also includes the budgeted financial statements, and then the cash flow, and then finally the income statement. The master budget is basically the management strategic plan for the future of our company. So in every aspect of the company operation is charted and documented for our future prediction. Besides that, it is used by our company to make a strategic big picture decision about the long-term strategy as well as the current year forecasting. And the master budget includes, as I said earlier, the balance sheet, income statement and the cash flows. Thank you. Hi everyone. Okay, now for the balance sheet, I will tell you about our company's balance sheet, which is firstly I'm going to tell you about the assets and liabilities. The assets of our company is estimated around 503 billion ringgit. That's quite a lot of money, and this is because we have high liabilities as well as high equity, because we know that assets equals to liabilities plus equity. And also from the balance sheet, what we managed to find is the return on asset of ratio, which is the ROA, and then the second one is the return of equity, is ROE. And for our company, the ROA and ROE is relatively small. This means that a lower liability dimension reflects on a better performance by our company. And for the second part, the balance income statement. Firstly, I will tell you the balance income statement contains all of the line items found in the normal income statement, except that it is a projection of what the income statement will look like in the future budget periods. So for our company, the income statement, after we analyze, what we found is that the profit margin for our company is about 35%. There is quite a high profit margin there for 35%. So it means that we make a good business. And the second part is about the gross margin. It's also in a high percentage, which is about 47 and 4%. Okay, and now going to the third item, which is the cash flow. Cash flow for our company, we have a positive cash flow. Cash flow, it means that what? For every quarter, we have a positive cash flow, which is 9.5%. So it is a good value. And using the discounted cash flow method, we get the value of the company, which is about 641 billions. And then the company also doesn't have any debt obligation to serve, so that the cash flow is healthy. Okay, thank you.
I in charge the decision making. There are 5 types of decision making: that accept or reject, make or buy, add or drop limited resources, and sell or process further. Special order analysis is one-time order made by a customer that requires a variation in the manufacture of the regular product. In this scenario, we estimate company Alpha want to place a special order of 50 units of Mazda 3 at price of 90,000 per unit, and our normal price for Mazda 3 is 105,000. We estimate the ordered special order at price 90,000, and we use contribution margin costing approach. First, we use estimate the sales quantity times the sales price and less the variable cost per unit. Direct material per vehicle is 70,000, and direct labor per vehicle is 2,000, and go we minus the direct manufacturing overhead. The total variable cost per unit we calculate is 76,850. Special order always happen in motor trading company because some group or organization want to purchase vehicles for large amounts in one time. So we must give them a special price in order to retain the customers. In this case, our company is still below maximum capacity even by special order. Even though Bermaz will lose 15,000 ringgit in contribution margin ceiling at 90,000 per Mazda 3. Bermaz still make a positive contribution margin by accepting the special order. So the special order will increase the potential net profit before tax by 657,500. If Bermaz was accept the special order, our decision is accept the special order.
Explain about the rating operation. We will focus about cost estimation, which is cost estimation is an approximate value of the total cost of a service, product, resource, and use for planning and resource allocation. Cost estimates are generally prepared as accurately as possible to prevent misallocation of resources or negative perceptions from clients, managers, and potential customers. Okay, for Bermaz, we focusing on least square regression method for cost estimating. We have chosen this method because it is more precise and reliable. For costing, product costing, we choose for calculating costing in Bermaz, we had applied absorption costing, where the manufacturing costs are absorbed by the units produced. The cost of a finished unit in inventory will include direct materials, direct labor, and both variables and fixed manufacturing overhead. For example, we decide to set the price according to the cost involved in selling activities. Sales material were defined from the cost of car we import from supplier. Direct labor we estimate 2,000 per unit, and direct manufacturing overhead are estimated by the average price of car industry. Selling expenses was related to the activities when selling a car, which the most expensive is design or engineering change, since Mazda is international brand. High cost in promotion and advertisement, since various kind of advertisement was implemented. Last item in costing is administration expenses, which includes all Mazda showroom expense in Malaysia.
I want to talk about the CVP, which is the cost volume profit. Cost volume profit analysis is used to determine how changes in cost and volume affect on a company's operating income and net income. So in this company we have several assumptions made that such as sales price per unit is constant, variable cost per unit is constant, total fixed costs are constant, everything produced is sold, and costs are only affected because of activity or changes. And for the cost volume profit analysis for these companies, we have the total sales of the product is above above 2 billion Malaysian ringgit, which then the selling price of each of our product, which is car, is 136,000, and the maximum number of the car that we estimated to sell in 1 year is 19,412. Under the CVP we have fixed costs, and our fixed cost in 1 year is above 9 million ringgit, and our variable cost is 5,100. And based on this analyzing, that we are going to find the CVP. From the CVP, we calculate the break-even point is at the 70. This is very impossible for us to get the break-even point figures as our sales at the higher quantity. So means that we do not have any break-even point in this product in this company. Thank you.
Going to summarize on the business proposal. So the performance of the company has increased significantly with 63% on yearly basis and 38% on quarter basis. The company also recorded the highest profit since its establishment. The company is planning to grow further by expanding its branch into 50 4S centers throughout Malaysia by 2018. The return on asset and return on equity also significantly increased yearly and quarterly basis due to rapid and aggressive sales and marketing activities. The company also has a very healthy cash flow with zero debt obligation to serve, and in the future the company seeks to reduce the operating expenses and increase its expense efficiency. So that's all from us, the Bermaz Autos yang Berhad. Thank you very much. See you next subject. Woo!